Are ADUs, accessory dwelling units, the next big thing in real estate investing? Many seem to think so, whether you've never heard of ADUs, heard them whispered in passing, or have completely dived into them as part of your real estate investing profile. There are still a lot of questions to ask and answer on the all-important financing side of the equation. Because as most investors know, building a true financial freedom portfolio with real estate is only really possible with the right loans and leverage. Accessory dwelling units, or ADUs, are rapidly growing in popularity across residential real estate and are becoming an increasingly important strategy for real estate investors. An ADU, sometimes referred to as an accessory apartment, casita, or in-law suite, is a smaller secondary dwelling located on the same parcel as a primary single-family home. According to conventional definitions, such as from Fannie Mae, a qualifying ADU is a self-contained unit with its own 1. Private entrance, ingress or egress, 2. Kitchen, sink with running water, cabinets, working stove or hookup, 3. Sleeping area, and 4. Bathroom, including shower facilities. To qualify as a true ADU, the secondary unit must also be subordinate in size to the main home and offer independent access and functionality. But before we dive in further, if you're finding this helpful, make sure to hit that subscribe button and be sure to check the description below for a link to our full DSCR loans guide for even more details. Okay, back to the topic at hand. There's been a recent surge in ADU adoption, likely driven by two key forces: housing shortages in high-growth and land-constrained metro areas, such as Austin, Texas, and Los Angeles, California, and stubbornly high home prices and interest rates, which make every incremental dollar of rental income more valuable to investors seeking positive cash flow and stronger returns. DSCR loans are well positioned to support this evolving strategy. Unlike conventional lenders bound by rigid agency underwriting, Fannie Mae, Freddie Mac, many DSCR lenders adapt more quickly to investor needs, especially for newer and emerging strategies such as single-family homes with ADUs. Most DSCR lenders allow financing for single-family residences with one legal ADU. However, properties with multiple ADUs, or 2 to 4 unit buildings with an added ADU, are typically ineligible for DSCR loans. Where DSCR lenders vary significantly is in how the ADU is treated during qualification and underwriting, particularly in the specific methodology used to calculate key metrics, such as the DSCR and LTV ratios, as well as property type classification, such as if it's an SFR or a duplex, all of which can significantly affect eligibility, qualification, and pricing, like your rates and terms. Property type classification for ADUs, financed with DSCR loans. Generally, a property with 2 full units, 1 main residence, and 1 an ADU will actually be treated as a single-family residence, or SFR, and not a duplex or 2-unit property for a DSCR loan. Even if the property is rented out to multiple tenants under multiple leases, investors can access DSCR loan terms based on SFRs, which have the most favorable loan terms, including lowest rates and highest leverage limits. There are, however, a few rare exceptions where a DSCR lender may classify a property with an ADU as a 2-unit instead of an SFR. This typically occurs if the property has a separate legal postal address, independent utility meters, and a formal zoning reclassification by the municipality. However, these are uncommon, and in the vast majority of cases, the property will be classified as an SFR by DSCR lenders. First, ADU FAQ. Is a property with an ADU considered a single family or a duplex for a DSCR loan? In almost all cases, a single-family home with 1 ADU is still classified as a single-family residence, not a duplex. This is favorable for real estate investors using the ADU strategy, since DSCR loans on SFRs qualify for higher leverage and better pricing, meaning lower rates than those on 2 to 4 unit properties. Next, valuation methodology for ADUs financed with DSCR loans. The valuation, or the applicable value utilized in the all-important LTV ratio calculation, is a crucial aspect of DSCR loan qualification and is the primary determinant of the total loan amount and leverage available to investors. Many investors targeting properties with ADUs likely need the value of the ADU to count in terms of qualification and underwriting by DSCR lenders if they want to secure the best DSCR loan terms available, so it becomes a crucial question for ADU investors seeking financing. Generally, for an ADU to be included in the valuation for DSCR loan qualification, the ADU must be permitted, the design and location of the ADU must be consistent with neighborhood norms, and the appraiser must use local comparable sales that include similar ADU configurations. If the ADU is unpermitted, it may still be allowed on the property, meaning it won't preclude eligibility, but its value will not be counted in the LTV ratio and for DSCR loan qualification purposes. On to the next most common ADU FAQ. Does the value of the ADU count in the appraisal and LTV for a DSCR loan? Usually yes. If the ADU is legal and permitted, the appraiser will typically include its contributory value in the total appraised value of the property. This directly affects the LTV ratio, which determines the maximum loan amount available to the investor, as well as loan rate and terms. Next, let's talk about rental income methodology for ADUs financed with DSCR loans. But before we do, if you want to see exactly what rate you qualify for right now, for a classic single-family rental or a property enhanced with an ADU or two, check out the link in our description to access our 10-minute web application. Okay, back to business. The property's rental income, or the numerator used in the important DSCR ratio, is also an important consideration for properties containing ADUs. Specifically, whether or not the rents from the ADU, whether from an in-place lease or STR operating history or market rent projection, will count in the DSCR ratio calculation. The good news for investors is that generally the rents from ADU units will be counted by DSCR lenders if the ADU is properly permitted, with similar requirements to use the ADU's value in the LTV ratio calculation. So this leads to another ADU FAQ. Can rental income from the ADU be used in the DSCR ratio for a DSCR loan? Often yes. Many DSCR lenders allow income from legal, permitted ADUs to be included in the DSCR ratio, especially when 1, the ADU is on a separate lease, 2, there is proof of rent received, typically 2 or more months, and 3, a market rent analysis, usually via Form 1007, supports the rental value. Lastly, let's talk about DSCR loan eligibility for properties with unpermitted ADUs. If an ADU doesn't have all proper permitting, many investors are surprised and delighted to learn the properties are likely still eligible for DSCR loans. In these cases, most DSCR lenders will qualify and underwrite the loan as if the ADU doesn't exist, solely evaluating and qualifying the property based on the primary residence on the parcel. That said, ADU eligibility and treatment still vary significantly across DSCR lenders. Investors considering the strategy should review the lender's specific policies and treatments, as well as any local regulations or requirement wrinkles that may lead a DSCR lender to evaluate a property with an ADU differently. And time for our final ADU FAQ. Does ADU value and rental income count when it's unpermitted for a DSCR loan? If the ADU is unpermitted, the property may still be eligible for DSCR loans, but typically with limitations such as 1, the ADU must be typical for the market and not impair the value or habitability of the primary home. 2, the appraiser must comment on the ADU and may exclude its value in the appraisal. And 3, rental income from the ADU will not be included in the DSCR calculation. And there you have it, the complete guide to DSCR loans and ADUs. This is a new and emerging topic and can still be confusing for many investors. And programs and rules are changing all the time. If you want to speak directly with an expert or stay up to date on all things ADUs and DSCR loans, head over to harbincapital.com and fill out our Contact Us form. Also, when you do, we'll send you our completely free ebook, 10 Obstacles for DSCR Loans and How to Overcome Them. Don't forget to like this video, subscribe to the channel, and check the description for all the links we mentioned today. Happy investing, and we'll see you in the next video.